Hello traders, this is your trader's friend. Thank you so much for joining me today for another video. Now this will be a temporary video. I will take this off in a couple of days, but I just wanted to show you me live in a Heiken Ashi Trade. What you have before you is the Euro USD on the 5-minute time frame and the Euro USD on the 1-minute time frame. And you can see on the 1-minute time frame we had lots of kind of false fake out signals. However, we are trading until we get a candlestick of a different color on the 5-minute time frame. Now, I am using a line chart here, but what I've done, I right click, went into my properties, and I took off the color in my line chart. So that's why it has no color, and all you can see are the Heiken Ashi candles. Now we're going to ride this out until one of three things happen. Well, actually, we're going to ride this out until we get a candlestick of a different color. I was going to say until we break the 10 SMA, the 50 SMA, or we get a candlestick of a different color, but we're going to ride this out until we get a candlestick of a different color today. So here we go. Now guys, I also wanted to show you that we are coming to an area of previous resistance. However, we're still not going to get out of this until we get the red candle. But I just wanted to show you, and in your own trading, be sure to mark significant areas of support and resistance. It can greatly enhance your trading. And the reason for this, of course, is because these are areas that you can get significant pullbacks or areas you can get reversals. So keep those things in mind. But it doesn't look like we have that problem. We're just kind of demolishing that. But at the same point in time, it can turn around and be a very strong reversal candlestick. So it's still important. No matter what the market does, the market's going to do what it's going to do. But no matter what the market does, it's important for you to at least know where there's a possibility that you're going to have a reversal or a strong pullback. Okay guys, you can see that pullback that I was talking about, and we may actually get that red candle here. However, we're going to hold out and see how this candle closes. So we have about 4 more minutes to see how this closes, but you see this significant pullback. Also, we have a pretty good distance here, but that doesn't mean anything because the market's going to do what it's going to do. So keep that in mind and follow your price action. Trade what you see, not what you think. Just trade what the market tells you to trade and what your charts say. Okay guys, I went ahead and closed out of that before I came back so I wouldn't lose too many pips. But between the two positions, we got about 80 pips. So that was a pretty good run considering. Now, you don't have to wait for the close of this candlestick before you get out of the market. If you see it starts to open red, and a lot of times I'll go ahead and get out when it opens red. And let me show you this on the traditional Japanese candlestick chart. This is why I use both charts. Now, we may get a bounce right here and come back, but it's no need for you to risk your profits to wait to see what the market's going to do. Now you can turn around and go bearish with this. It's totally up to you. But if I turn around and go the opposite direction, then what I like to do is to go ahead and trade with like a third of what it was that I was trading with the trend. So if I'm trading with 3 pennies with the trend, then I'm going to trade with 1 penny against the trend. Guys, just want to remind you that you can absolutely do this. You can be successful at Forex. Have a terrific trading week.